The Book Essence Podcast, Episode 13. The Basics of Bitcoins and Blockchains, Part 2.
All right, ready to dive deep. Today, it's Bitcoin and blockchain.
Sounds exciting.
It is, but it's one of those things that everyone's heard of, but not everyone really gets,
Yeah. Yeah.
So today, no jargon, no tech overwhelm. We're breaking it down.
Okay.
So you can walk away feeling like you could actually explain this at a dinner party.
I like that dinner party ready.
Right.
And honestly, it's more fascinating than intimidating once you get past all the buzzwords.
I agree. Okay, so first things first, let's tackle blockchain. What's the simplest way to explain this without making someone's eyes glaze over?
The simplest way.
Yeah.
Imagine a digital ledger like a giant spreadsheet.
Okay.
But instead of being stored on one central computer,
Right.
it's copied across a whole network. So every transaction, think buying a coffee with Bitcoin, gets recorded on everyone's copy of the ledger.
So it's kind of like a public record.
Yes.
But way more secure since it's not just sitting on one server someone could hack into.
Exactly. And that's where the chain part comes in. Each new block of transactions is linked to the previous one using some seriously clever cryptography, making it virtually tamper-proof.
So like changing a transaction
Yeah,
is like trying to solve a million Sudokus at once.
pretty much.
No thanks.
Yeah.
But why is this whole decentralized thing such a big deal?
Think about traditional systems. Your bank, for instance, they control all the transactions.
Right.
And if their system crashes,
Uh,
you're out of luck.
yeah, not good.
With blockchain, there's no single point of failure.
So it's like a safety net for the digital age.
You could say that.
Makes sense why people get excited about
Yeah.
that. But hold on, I keep hearing that blockchain is way more than just Bitcoin.
Right. Bitcoin was the first application of blockchain, its claim to fame,
I see.
But the tech itself is like a blank canvas. Think of supply chains.
Oh, interesting.
You could track a product from factory to store, ensuring it's authentic and ethically sourced.
Ooh, that's cool. So like no more knockoff designer bags or conflict diamonds slipping through the cracks.
Precisely. Or even voting systems.
Okay.
Imagine elections where every vote is recorded securely and transparently on the blockchain, making it nearly impossible to manipulate the results.
Okay, now my mind is officially blown. But before we get lost in all the possibilities, let's zoom back in on Bitcoin. It's a digital currency, right?
Yes.
But how is it actually different from the money in my bank account?
Think of it this way. It's digital cash.
Okay.
With your bank account, you're relying on the bank to be the middleman
Right.
for every transaction. With Bitcoin, you cut out the middleman entirely.
Interesting.
You send and receive it directly, peer-to-peer, with the blockchain keeping track of everything.
So it's like handing someone a $10 bill,
Yes.
but digitally.
Yeah.
And with a super secure receipt system everyone can see.
Perfect analogy.
I like it.
And since Bitcoin isn't controlled by any government or institution,
Right.
its value comes from something else entirely. Market forces, supply and demand.
Wait, so its value goes up and down based on how many people want it?
Yes.
And how much is available?
Exactly. There's a fixed supply of 21 million Bitcoins
Wow.
that will ever exist. As demand increases,
Right.
supply remains limited,
Okay.
the price tends to rise.
So it's like a digital gold rush.
I like that.
But instead of digging in the dirt, we're mining, what, ones and zeros?
Kind of. We'll get into the nitty-gritty of Bitcoin mining later.
Okay.
But for now, just know it's a complex process
Right.
that involves solving cryptographic puzzles to verify transactions
Okay.
and add new blocks to the blockchain.
Sounds intense. But hey, if it keeps the Bitcoin flowing and the system secure, I'm all for it. Now, I know there's a whole universe of digital assets besides Bitcoin, right?
Yeah.
Tokens, NFTs, all that jazz.
Yeah.
Are those also built on this blockchain magic?
You got it. Think of the blockchain like a highway.
Okay.
And these other digital assets,
Right.
tokens,
Uh-huh.
are the vehicles driving on it. Bitcoin was the first car on the road.
Okay, I see.
But now we have all sorts of vehicles,
Oh, well.
each with its own purpose and functionality.
So Bitcoin paved the way.
Yeah.
And now we've got this whole ecosystem of digital assets cruising along on the blockchain.
Exactly.
I'm picturing a futuristic freeway with flying cars and robot drivers.
Ah, I love that visual. And it's a pretty accurate analogy. We've got stable coins pegged to fiat currencies like the US dollar,
Okay.
utility tokens that grant access to specific features within a platform, and of course, NFTs.
Right, those unique digital collectibles that everyone's talking about.
Exactly.
NFTs are the ones that even my grandma is asking me about.
I believe it.
So instead of owning a physical painting, I could own a digital version recorded on the blockchain, and everyone knows it's the real deal.
That's wild.
Exactly, and that's just scratching the surface.
Wow.
We haven't even touched on things like decentralized finance, DeFi,
What's that?
where you can lend, borrow, and trade crypto assets without the need for traditional banks. Whoa, hold on. This is a lot to process. Before we dive headfirst into that DeFi rabbit hole, maybe we should rewind a bit and talk about how these ICOs, those crypto crowdfunding things, fit into all of this.
Good point. ICOs played a significant role in the early days of the crypto boom. They were like the Wild West of fundraising,
Oh, wow.
with projects raising millions,
Really?
sometimes billions,
Oh, my God.
by issuing their own tokens.
It sounds a bit like a gold rush with everyone scrambling to get a piece of the action.
Very much so.
But I also remember hearing about a lot of scams and projects that fizzled out.
You're right. The lack of regulation led to both incredible successes and spectacular failures. It was a time of high risk and high reward.
Oh, wow.
But even with the risks, ICOs were instrumental in funding the development of many innovative blockchain projects.
So it's like a double-edged sword.
Yeah,
Potential for innovation, but also ripe for exploitation.
exactly.
It sounds like the crypto world is not for the faint of heart.
Definitely not. But that's part of what makes it so fascinating. It's a constantly evolving landscape, with new challenges and opportunities emerging all the time.
All right, I'm ready for the next leg of the journey.
Yeah.
Let's unpack this world of digital tokens and see what treasures we can uncover.
Let's do it.
We've covered a lot of ground already, blockchain basics,
Yeah.
Bitcoin's rise, even those wild ICO days. Now it's time to explore the diverse world of digital tokens.
All right.
I'm especially intrigued by these asset-backed tokens. Is it really possible to own a piece of gold digitally through a token?
Absolutely. Think of it like this. Traditionally, if you wanted to invest in gold, you had to buy physical bars or coins,
Right.
store them securely, deal with all the hassle of transporting and selling them.
Yeah, that sounds like ass.
With asset-backed tokens, you can own a fraction of a gold bar represented digitally on a blockchain
Interesting.
without any of those logistical headaches.
So instead of having a heavy gold bar stashed under my mattress,
Right.
I could have a digital token representing its value stored securely in my digital wallet. That's
Yeah.
pretty slick.
Exactly.
But how do I know there's actually real gold backing up my token? What's stopping someone from just creating tokens out of thin air?
That's where trusted custodians come in.
Okay.
These are independent entities, often regulated financial institutions, responsible for holding the physical asset, in this case, gold, and issuing tokens that represent ownership.
So they're like the middleman.
In a way, yes. But these custodians undergo regular audits to ensure they hold the assets they claim, adding a layer of security and transparency.
So it's like having a digital vault guarded by a reputable security company. Makes sense.
Mhm.
But what happens if something happens to the custodian? What if they go bankrupt or, pull a disappearing act with all the gold?
That's a valid concern, and it highlights the importance of choosing custodians with a proven track record and strong financial standing. Absolutely. Regulation also plays a crucial role in mitigating custodian risk. In many jurisdictions, custodians are required to adhere to strict guidelines and regulations to ensure the safety of the assets they hold.
So it's not just about picking any random custodian. You got to do your due diligence and check their credentials,
Exactly.
just like you would with any other financial institution. Okay, that makes me feel a bit better. Now, besides gold, what other assets can be tokenized?
Pretty much anything of value. Real estate, fine art, rare collectibles, even intellectual property rights. All of these can be represented by tokens on a blockchain.
Wow. So instead of dealing with mountains of paperwork and complicated legal processes when buying a house,
Yeah.
I could potentially transfer ownership through a tokenized system recorded securely and transparently on the blockchain.
You got it.
Sign me up.
Tokenization has the potential to revolutionize how we own and trade assets, making it more efficient, accessible, and secure.
This is getting me really excited about the possibilities. But before we get too carried away, let's not forget about those other fascinating tokens we touched on earlier, NFTs.
Right.
Those seem to be all the rage these days, with everyone from celebrities to, your average Joe jumping on board.
NFTs are definitely having their moment in the spotlight, and for good reason. They introduced the concept of digital scarcity, which was previously impossible to achieve.
Okay.
Unlike a JPEG that could be copied endlessly, an NFT represents a unique, one-of-a-kind digital asset with ownership recorded immutably on the blockchain.
So even though anyone can technically right-click save a digital image, owning the NFT associated with it is like owning the original masterpiece, signed and verified by the artist.
Exactly. It's like having a digital certificate of authenticity
Yeah.
that proves your ownership and can be verified by anyone. This opens up a whole new world for artists and creators, allowing them to monetize their digital work in ways that were never possible before.
I'm starting to see why people are so excited about NFTs. It's not just about owning a JPEG, it's about owning a piece of digital history, a piece of the creator's vision. That's pretty cool. But with all these different tokens floating around,
Yeah,
how do I actually manage them? Where do I store them and how do I use them?
that's a great question. Managing and storing your tokens securely is crucial. Think of it like managing your real-world finances.
Right.
You wouldn't just leave your cash lying around, would you?
Definitely not.
The same goes for your digital assets.
Okay.
Your private keys are like the keys to your digital vault.
Well-
They're what give you access to your tokens. If you lose them, your tokens are gone forever. So choosing the right wallet to store your keys securely is paramount.
You're right. I've heard some horror stories about people losing access to their crypto fortunes because they lost their private keys or forgot their passwords.
Oh, yeah.
Not a mistake I want to make.
Definitely not. So let's talk wallets. I know there are different types, right? Hot wallets, cold wallets.
Yeah, what's the deal with those?
You got it. Hot wallets are connected to the internet and offer convenience for frequent transactions.
Okay.
Think of them like your everyday wallet, where you keep a small amount of cash for daily expenses.
Sounds convenient, but also a bit risky. What's stopping someone from hacking into my hot wallet and making off with my tokens?
Security is a valid concern with hot wallets. It's crucial to choose reputable providers
Okay.
with strong security measures in place, like two-factor authentication and encryption. It's also important to be vigilant about phishing scams and other online threats.
So it's like using a secure online banking app. You wouldn't access it from a public Wi-Fi network or click on suspicious links.
Ah.
Got it. Now, what about these cold wallets? Are those like keeping your life savings in a safe deposit box?
Exactly. Cold wallets store your private keys offline, making them much more secure,
Okay.
but also less convenient for frequent transactions.
Right.
They're typically hardware devices like USB sticks that you keep disconnected from the internet unless you need to access your funds.
So it's a trade-off between security and convenience.
Yeah.
If you're holding a significant amount of crypto, a cold wallet seems like the way to go, even if it means a bit more hassle.
Exactly.
But how do I actually buy and sell tokens? Do I need to go through a special crypto bank or something?
Not quite. You'll need to use a cryptocurrency exchange.
Okay.
These are online platforms that connect buyers and sellers of cryptocurrencies and tokens,
Okay.
much like a stock exchange for traditional assets.
So it's like a digital marketplace where I can browse different tokens, see their prices, and make trades. Sounds straightforward enough,
Yeah.
but how do I choose a reputable exchange? There seem to be so many out there.
It's essential to do your research and choose exchanges that prioritize security,
Right.
have a good track record, and offer a user-friendly interface. Look for exchanges that are regulated in your jurisdiction and have a strong reputation in the crypto community.
Security and reputation, got it. But even if I find a secure exchange and a trusty wallet, there's still the issue of actually using these tokens, right?
Hmm.
Can I use them to buy things in the real world, or are they mostly for trading and speculation?
That's a great question, and the answer is rapidly evolving. While Bitcoin was initially envisioned as a peer-to-peer electronic cash system, its adoption for everyday transactions has been slower than anticipated.
I guess I'm still waiting for the day when I can buy my morning latte with Bitcoin.
Don't give up hope just yet. While mainstream adoption is still in its early stages, the number of merchants accepting cryptocurrencies is steadily growing.
That's good to hear. But what about the environmental impact of all this?
Mhm.
I keep hearing about Bitcoin's massive energy consumption.
Right.
Does that apply to all blockchains and tokens?
That's a valid concern, and it's important to address it head-on. Bitcoin's energy consumption is a result of its proof-of-work consensus mechanism,
Okay.
which requires vast amounts of computing power to verify transactions and secure the network.
So Bitcoin's a bit of an energy hog. Are there any more sustainable alternatives out there?
Absolutely. Many newer blockchains use alternative consensus mechanisms like proof of stake, which are significantly more energy efficient.
So it's not a one-size-fits-all situation when it comes to energy consumption.
Exactly. It's important to look at the specific blockchain and its underlying technology when considering its environmental impact. The good news is that the crypto community is increasingly aware of these concerns and actively developing more sustainable solutions.
That's reassuring to hear. I'm all for innovation, but not at the expense of the planet. So with all this talk of tokens, wallets, and exchanges, it's easy to get caught up in the technical details.
Yeah.
But I think it's important to step back and remember that this is all about empowering individuals, right?
Yes,
Yeah.
you hit the nail on the head. At its core, blockchain technology and the rise of cryptocurrencies represent a shift away from centralized control and towards individual empowerment.
Hmm.
It's about giving people more control over their finances, their data, and their digital lives.
That's a powerful message, and it makes me even more excited about the potential of this technology. But let's be real.
Yeah.
There are also risks involved, right?
Absolutely. The crypto world is still relatively new, and with any emerging technology, there are inherent risks.
Like what?
We've talked about the importance of security and the potential for scams.
Right.
There's also the issue of volatility. Crypto prices can fluctuate wildly, which can be both exciting and terrifying for investors.
Yeah, I've seen those price charts. They look like a roller coaster ride.
Exactly. And then there's the regulatory landscape, which is constantly evolving and can vary significantly from country to country.
Oy.
It's a complex and dynamic environment, which is why it's so important to stay informed, do your research, and approach it with a healthy dose of caution.
Okay, I'm starting to get the bigger picture here. It's like any new frontier, there's a lot of potential for growth and innovation,
Yes.
but also inherent risks and challenges.
Oh.
But hey, that's
Yeah.
part of what makes it so exciting.
Right. Exactly. It's a constantly evolving landscape, which keeps things interesting.
Well, I'm definitely feeling more informed and ready to dive deeper into this world. But before we wrap up, I'd love to hear your thoughts on where all this is heading.
Yeah.
What does the future hold for crypto? Is it just a passing fad, or is this the beginning of a financial revolution?
Okay, so we've explored the tech, the tokens,
Yeah.
even touched on the potential risks. But let's be honest, the question on everyone's mind is, can I actually make money with this crypto stuff?
Huh. Straight to the point. It's true, the potential for profit is a big part of the crypto allure, but it's not a get-rich-quick scheme.
Right.
It's an investment landscape, and like any investment, it comes with risks and rewards.
Okay, so no Lambos overnight.
Probably not.
But seriously, the crypto market is famous for its volatility.
Right.
1 minute you're up, the next you're down. How do you even approach investing in something so unpredictable?
You have to kind of shift your mindset. Unlike traditional markets,
Crypto trades 204/7. No weekends off, no closing bell. That constant motion can amplify the feeling of volatility,
I see.
but it also creates opportunities.
So it's not for the faint of heart or those who check their portfolios obsessively?
Yeah, I'd agree with that.
But what actually drives these price swings? It can't just be people randomly buying and selling, right?
Well, supply and demand play a role, of course, but it's more nuanced than that. News events, like a major company adopting Bitcoin, a government cracking down on crypto, even a celebrity tweet, those can trigger huge price movements.
It's like the whole world is watching,
Yeah,
waiting for the next big thing to move the market.
pretty much.
No wonder it feels like a roller coaster.
Exactly. And then you have the whales,
Right.
those large investors who can single-handedly influence the market with their massive trades.
Oh, wow.
They can create waves that even the most seasoned traders struggle to navigate.
So it's a bit like a high-stakes poker game?
Yeah,
With everyone trying to read the other players
Right.
and anticipate the next move.
there's definitely an element of that. But unlike poker, where you're playing against others, successful crypto investing requires focusing on the long game,
What do you mean?
understanding the technology, evaluating projects, and making informed decisions based on research, not just hype.
So it's not about gambling on short-term fluctuations,
Oh,
but investing in something you believe has real potential.
exactly. And that's where things get interesting. There are different investment strategies to consider, depending on your risk tolerance and goals.
Okay, let's break those down. I've heard of HODLing. Is that like the buy and hold strategy of the crypto world?
You got it, HODL, or hold on for dear life.
Oh,
It's a long-term strategy where you buy and hold on to your crypto, weathering the storms of volatility, believing in its long-term potential.
so it's for those who see crypto as a revolutionary technology,
Yes.
not just a quick way to make a buck.
Precisely. It requires patience and conviction. Then you have swing trading, which involves trying to catch those price swings for short-term gains.
So riding the waves, buying low and selling high.
Yeah.
but over a period of days, weeks, or even months.
Exactly. It requires more active management, understanding technical analysis, and, well, a bit of a gambler's spirit. And then there's day trading.
Okay, so that's the most intense.
Yeah, it's the most intense and risky approach.
This is the one where you're glued to the charts, making multiple trades a day, trying to squeeze out every tiny profit.
Right. It. But day trading is not for the faint of heart. It requires nerves of steel, deep market knowledge, and a high tolerance for stress. Frankly, most day traders end up losing money.
So unless you're a financial wizard with a sixth sense for market trends, it's probably best to steer clear.
I would say so. There are other less risky ways to participate in the crypto ecosystem. For example, you can explore yield farming or staking.
Yield farming, staking, those sound like farming metaphors.
Yeah.
But I'm guessing they involve something other than planting seeds in the ground?
You got it. Yield farming and staking are ways to earn passive income with your crypto.
Interesting.
It's like putting your money to work for you, earning interest or rewards.
So instead of just HODing and waiting for the price to go up, I can actually generate income with my crypto. That's pretty cool. But honestly, with all this talk of strategies and different approaches, it's a lot to take in.
Yeah, it can be overwhelming.
What's the best way for someone new to crypto to get started?
Start small.
Okay.
Learn as you go. And never invest more than you can afford to lose. Treat it like an experiment, not a gamble.
Good advice. But with literally thousands of cryptocurrencies out there, how do you even choose what to invest in?
That's where research comes in. Don't just chase the hype. Look for projects with a clear purpose, a strong team, a solid track record. Read their white papers.
Their what paper?
Their white papers, those are like their mission statements. Explore their communities and see if you believe in what they're building.
So it's not just about finding the next Bitcoin, but finding projects that are solving real problems and have the potential to make a positive impact.
Exactly. And diversification is key. Don't put all your eggs in one basket. Spread your investments across different cryptocurrencies and projects to mitigate risk.
This has been incredibly insightful. But the big question remains, what's next for crypto? Is it a fad that's going to fade away, or is it here to stay?
I believe blockchain and crypto are here to stay. They're already disrupting finance and making inroads into other industries, from supply chains to healthcare. It's just the beginning.
So we're just scratching the surface of what's possible. What kind of future are we looking at?
Imagine a world where you can send money across borders instantly and cheaply, where your digital identity is secure and controlled by you, not corporations, and where supply chains are transparent and ethical. Blockchain has the potential to make all of this a reality.
It sounds like we're on the verge of a major technological shift.
Yeah.
Exciting and a little bit daunting at the same time.
It is. There will be challenges and setbacks, but the possibilities are immense. The future of finance is being rewritten right before our eyes.
Well, that's an inspiring note to end on. Thank you for guiding us through this deep dive into the fascinating world of Bitcoin and blockchain.
It's been my pleasure.
I feel like I've learned a lot, and I'm excited to keep exploring this space. Remember, stay curious, keep learning, and always invest responsibly.
Couldn't have said it better myself.
And that's a wrap on our deep dive. We hope you've enjoyed this journey into the heart of the crypto universe. Until next time, keep exploring, keep questioning, and keep diving deep.